This is all about Bitcoin, a show dedicated to all things questions and markets related to Bitcoin, little b for the currency, and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation, all Bitcoin, all the time. I'm your host, Christine Lee. All right. Oh, I see. Oh, you guys, I see pause for a surprise on the teleprompter. I'm like, what? You guys are so sweet. Thank you so much. Today is indeed my birthday, and we have a nice surprise in terms of Bitcoin. Right now, looking at the CoinDesk Bitcoin price XBX index, we're getting a recovery. Trading, it's now at 36,982. Bitcoin is slightly up about 2.3% for the day. The most reliable reference prices for institutions since 2014 are now published under the CoinDesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
All right, Bitcoin recovering from Monday's low of about $33,000, which represented a severing of half of its all-time high value of $69,000 in November. NYDIG saying the 52% decline from the peak thus far ranks sixth in Bitcoin's history, adding this is a strikingly similar decrease in duration as the drawdown exhibited over the spring of 2021, with the caveat that this drawdown could continue to grow larger. Bitcoin's largest three drawdowns were also its longest, coinciding with the end of cyclical price rises. But unlike previous market routes, NYDIG saying this sell-off has not been accompanied by market panic. On the contrary, it's been quite orderly, without significant deleveraging or liquidations. Open interest on futures contracts remains steady, and there is relatively low price volatility compared to previous drawdowns. Finally, only a small percentage of coins changing hands have been held for more than a year, which means long-term holders are holding, and that most of the selling is from short-term holders, according to NYDIG. Right, taking a look at some of our top stories. Readings from the Relative Strength Index, a price chart indicator for Bitcoin, hovered at the 50 mark during European hours Tuesday, recovering from oversold levels of under 30 over the weekend. RSI calculates the magnitude of price movements for assets, with readings below 30 indicating prices of an asset have fallen further than its fundamental value. Meanwhile, the Bitcoin-Ether ratio rallying to the highest level in 3 months as adverse macroeconomic conditions unexpectedly took a bigger toll on the native token of Ethereum's blockchain. According to TradingView data, the Bitcoin-Ether ratio has entered the bullish territory above the 200-day moving average. Fairlead Strategies saying that should the ratio succeed in establishing a foothold above the critical technical line, it would imply a continued Bitcoin outperformance in the near term. Finally, Bitcoin accumulating software company MicroStrategy will continue investing in BTC despite the recent slide in the asset's value. CFO Feng Li telling the Wall Street Journal the company's strategy is to buy and hold. And as of the end of 2021, MicroStrategy held over 124,000 BTC, which it had purchased at an average price of over $30,000. Okay, joining us now to discuss the BTC price and more is Anthony Saccaro, founder at Providence Financial and Insurance Services. Hello there, Anthony. So this sell-off is 52% down from the peak, ranks as the sixth largest for Bitcoin, according to NYDIG, but analysts suggest it's been quite orderly in terms of a sell-off. What kind of data are you looking at for some sort of sense of direction for Bitcoin?
Yeah, absolutely. Great question. And I would be remiss if I didn't say happy birthday as well. So happy birthday.
Been great.
To get started right. But the reality is Bitcoin has been more orderly than it has been in the past. And ironically, Bitcoin in the past has been something that investors would go to as an alternative to stocks. Or if stocks started to go down, if inflation started to go up, that would be something that Bitcoin would be bought on. It was kind of contra stocks, contra inflation, if the dollar was weakening, Bitcoin would be bought. Now it seems to be more correlated with the major asset classes than it has been before. And I think there's a lot of good reasons for that. Number one, there's how many ETFs available now? I mean, I think there's 12.5 or so ETFs available, obviously with BITO being the largest one and the first one out of the gate. But what that does is that gives everyday average Americans the ability to get into Bitcoin, whereas they didn't necessarily have that ability or didn't take enough time and ambition to open up a wallet and an exchange account and so on to go buy it. Now it's readily available. So investors are going to certainly control the influence, the direction of Bitcoin through their emotions. So if they're risk off, as is what's happening with the stock market, then they're going to be risk off with Bitcoin as well. And that's a little bit different than we've seen before. Same thing with corporations. Corporations have invested in Bitcoin more than we've seen before. So if they're in a risk off scenario and they don't like what Jerome Powell talks about or the direction of inflation, and they think maybe it's time to shore up or focus a little more on conserving their portfolio, then Bitcoin at this point is going to be an asset class that they're going to sell as well. So it's opposite of what we've seen before. It seems to be more correlated with the market than we've ever seen before. I'm not sure that that's bad. It's just the way it is at this point.
Mm-hmm. You mentioned Jerome Powell. So the Fed, they're having a meeting on Wednesday. It's widely expected to reveal the agency's stance on a rate hike in March of this year. The Fed previously stated it would tighten monetary policy with up to 4 rate hikes this year to keep inflation in check. What will you be watching out for?
Yeah, well, Jerome Powell pretty much told us that that's what they're going to do in his confirmation hearing that he had, I think it was 2 weeks ago or something along those lines. And the reality is we fully expect that that's what's going to happen. The market now officially yesterday and today entered correction territory. It didn't close at correction territory, but it hit that 10% level. There's been a lot of individuals, including myself, predicting that in 2022 there will be a 10 to maybe 15 or 20% correction. We've already hit that 10%. Could it go deeper? I think it could. I think it probably will go a little bit deeper. At the end of last year, Q4 of 2021, I was predicting more of maybe a 25%. I think that's going to be off the table, but we don't know for sure. Anyone that tells you they know what's going to happen with Bitcoin, with the market, is just lying. Mm-hmm. No one knows. It's educated guesses. The reality is that a lot of it is in the Federal Reserve's hands at this point. It's them that are going to control the direction of the market. And ironically, they're not supposed to have anything to do with the market, but that is what the market's going to be looking at. And if they become too hawkish, and I think they're riding that line, but if they become too hawkish, it could send the markets sailing downward more than even 20% or so. So they got to be really careful.
Where's the floor, do you think? Do you see a retest of the July lows of around 29,000 to 30,000, and is $100,000 per Bitcoin, is that a faraway dream?
Yeah, no, I don't think it's far away. Matter of fact, BlackRock, thank you. BlackRock, the largest institutional investor, said that they see a $100,000 target price on it in the next 5 years. And I don't think that's aggressive. I think that Bitcoin could hit $100,000 within the next 2 to 3 years. And there's a lot of people out there that agree with that. Of course, it could move on a lot higher than that as well. But we've seen some big moves. And I don't have the numbers in front of me, but I think Bitcoin went from something like 8,000 to 18,000 in just a relatively short time. I think it went from 18,000 to 60,000 in just a period of a year or year and a half. And now that it's traced back, this is not the first time this has happened. There's been over a dozen times since 2015, 2016 that Bitcoin's pulled back by more than 50%. So the reality is that this is just normal. It's the way that Bitcoin works. It will double again in value. I think that could happen pretty quickly. And 100,000 is not out of range. I think for sure it's going to get there. It's just a matter of when.
All right. So roller coaster till then. Anthony, thanks so much for joining us. That was Providence Financial and Insurance Services founder Anthony Saccaro. Coming up, as part of Privacy Week, we dive into the data behind Bitcoin mixers and how they hide your transactions from the public eye.
What's up, everybody? This is Spencer Dinwiddie.
And I'm Solo Cisse.
And this is New Money, brought to you by CoinDesk.
All I hear, go get the money. So I go get it. Hate means I do something right. So I'ma let him. Yeah, I'ma let him. Yeah, I'ma let him. I hit the
money not only being exchanged for this digital currency, but the frictionless movement across borders. It's going to be able to flow as easy as a text message.
Staying true to yourself, right? Like, you've always been true to yourself.
I just want to share that with everybody. You know, you could be yourself in full capacity.
It's our duty to take our visions and be fearless in our pursuit.
Be my most authentic self and show people that, look, I'm an athlete, and yes, I'm also a part of the LGBT community.
My goal is to have, my own NFT, my own entire IP, like my own everything.
How do you think, blockchain and crypto impacts the way you think about it?
I think everyone has like some sort of like,
So how'd you get into Bitcoin?
it's like asking someone if they smoke. It's like, yo.
Embracing where the world is going. And when the whole world shut down, we saw just how important tech was.
It was more so of my style and the foods that I cooked that kind of pushed me. I wanted to live the lifestyle of an athlete or an artist while doing what I love.
Having that open mind, having that flexibility just allows you to be of so much more service to, youth or society in general.
Gamers, maybe it's because you guys just hustle different.
Anything you want to be great at, you got to put hours and hours in every single day.
Welcome back. The Bitcoin blockchain is entirely public, which some consider a huge privacy flaw. Enter Bitcoin mixers, aka tumblers. These are tools that jumble up an amount of Bitcoin in private pools before spitting them out to their intended recipients. Joining us now to discuss is CoinDesk research analyst George Kaloudis. Hello there, George. So for CoinDesk Privacy Week, you've written an article that's just gone up on the website on cryptocurrency mixers, which are often associated with illicit activity in the news. But you've looked at the data, and mixer transactions are not prevalent at all.
Yeah, and thanks for having me, Christine. Happy Privacy Week and happy birthday. The internet and banners tell me that today's your birthday, so happy birthday. Yeah, so there's a sort of a long winding path to us getting to talking about mixers, but when people start talking about Bitcoin, after they point to the crazy price appreciation, they tend to point to its anonymity and its implicit promotion of illegal activities on the dark web, money laundering operations, and ransomware attacks. And as you suggested, it's actually not very good for that, right? Bitcoin runs on a public ledger, and we have companies who are in the business of blockchain forensics, and those companies end up providing data that can literally quantify the amount of illicit activity that is carried out on Bitcoin. So like you said, we have mixers. So there is a way for people to put money into a mixer, and on the other side comes out scrambled Bitcoin that doesn't have an identity attached to it. But if we just look at the data straight up right now, we saw that 65,000 Bitcoin was mixed in January 2021, which is an all-time high, which sounds like a lot. But when you consider that 18 million Bitcoin was transacted in that same month, that's really lower than a percentage point. So my take is that part of this overall lack of adoption can be due to exchanges blocking withdrawals to the privacy-preserving Bitcoin wallets, such as the Wasabi wallet and the Samurai wallet, which enable coin joins, which is the way people mix Bitcoin. And quite frankly, some exchanges are wishy-washy about accepting this, tainted Bitcoin that has been mixed.
I wonder who is using these services, and you mentioned some of the applications what are the most popular applications?
Yeah, so you can't really tell, right? That's the great part about privacy, is that people want privacy for many different reasons. I would like to take the stand here and say that privacy is a human right. And quite frankly, it's kind of interesting that Bitcoin is touted as incredibly private, but it doesn't even provide you the same privacy feature that a general bank account will provide you. And what I mean by that is you could have a lot of friends and family that, may be a little bit interested in what you're buying or maybe how much money you have. No matter how hard they try, they can't call your bank and say, hey, how much money does George have? Hey, what did Christine buy the other day? I want to see if she bought me a certain birthday present or something. With Bitcoin, theoretically, if I found out what your Bitcoin address was, Christine, or if you found out what mine was, you would have found out that, I went to Harris Theater or my local grocery store and I sent you a cake for your birthday, and that would ruin the surprise. So now with Bitcoin mixers, you can actually have that level of privacy. So in my head, a lot of people talk about people using Bitcoin mixers for, illegal purposes. But if we just spin that and put it on its head and say people should have the right to privacy and bad people are going to do bad and illegal things anyway, I should have the right to, you don't to mix my Bitcoin and you can't see what I'm doing, right? That's fine. I'm not doing anything bad.
Is it illegal or it's totally
gray area?
Gray
area. It depends
area.
on the jurisdiction.
Okay.
I would say it's not.
And can Bitcoin through mixers still be tracked in some way, though?
in a way, yes. If you don't mix, when people do coin joins, which is the mixing way you mix Bitcoin, you have to do it more than once. Otherwise, you can still, with some very sophisticated algorithms, figure out what is going on. And it's actually part of the path for more privacy in the Bitcoin space. Is we saw people talking about Taproot happen at the end of last year. And a lot of people on social media promised a lot of things with Taproot, and a lot of people were talking about privacy. In reality, Taproot was not that big of a deal on its own because it wouldn't enable that many privacy features. But what it does enable is a foundation, a technical foundation for developers to come in and start building more tools. And one of those things it'd be able to do is enable something called cross-input aggregation of signatures, or CISA, which is like the pretty way of saying it. And that actually would make coin joins cheaper and even more private than they are now. So there is still a lot of work to be done on the side of coin joins and new technology coming into play.
Well, I think privacy should be embedded in money. I mean, if you do surprise me with the birthday cake, I'd want it to be a surprise. All right, George, thanks so much for joining us. That was CoinDesk research analyst George Kaloudis. You can read his full article on CoinDesk.com. That's it for All About Bitcoin. I'm your host, Christine Lee, and we'll do it all over again tomorrow at 3 o'clock in New York. Also join us tomorrow morning at 9 a.m. for First Mover. You're watching CoinDesk TV.